Good morning. Today is Monday, March 2nd, 2020. Over the weekend, I've put some thought into the recent market sell-off and how to go about looking at this and quantifying it and using some logic to either help people understand what's going on or at least uncover some assumptions or even some faulty thinking that I have. So the worth of any company is its future cash flows discounted back to today. So anything that affects those cash flows going forward will affect its value. So it's rational that something like the coronavirus will change those assumptions, and if it's going to hurt business, decrease that present value. That's a rational reaction to what's occurred. The degree to that is kind of the question mark. Now, the question is a double-digit sell-off in 1 week the rational response to this event? Regardless of where you think the market stood, 2 weeks ago, I personally think it was a little overpriced, but that's sort of outside of the argument. What has changed in 2 weeks with this coronavirus, with the future? So if you take a discounted cash flow, if you use a discounted cash flow model, just a very basic one, and you can play around with these assumptions, but the result is essentially the same. But even if you assume the virus will completely wipe out all profits for every company or any company over the next year, the year 2, it'll be 50% of its what its earning power was, and year 3, 75% of that. So a 25% drop. Even under those scenarios, the present value of those cash flows is only off about 12%. So what is that saying? So what can we take from that? We can say either I don't know, I'm assuming wrong that this scenario might happen, that companies will actually lose these earnings permanently in the present, and there'll be some sort of future effect, or a combination of the two. It could hurt 50% now. It could affect these companies 5 or 10 years down the road. That seems kind of unlikely, as does the scenario of the current year's earnings being completely wiped out. So when I put these numbers into a spreadsheet and I put them up and look at them and think about what it means, what I take away is that the sell-off was more of a momentum thing. It was more of fear. It may continue today. Who knows? Really the job of the analyst is to assess future cash flows. What are the likelihood of them materializing? But just to take a step back and say, what is what's happening imply for the future, and what we can learn from it. So hope this helps at least ground your thinking. Always just sort of come back and think of the logic, think of what things are implying for the future. Stay rational. It's sure to be a bumpy week, but remember, if you own stocks, you own businesses, and businesses will be around for a while. So have a great week, everyone. Thanks for listening.